like to all of us to take some notes. Yes, not today, but every day. Guys, every chapter is into handwritten notes. The reason is that tax is okay now, but one day before the exam, it's too much to revise. You have DT, you have GST, and you have only 1.5 day. And out of that 1.5 day, half day goes in crying about the earlier papers. Yeah, yeah, life, you question all your life decisions and like what has happened, why, etc. So half day goes in that, so you barely get one day. So in that one day, if you want to revise well, you really need to have some crisp notes, and hence you have to have these handwritten notes. So you have to have one nice big full scale book where you write your notes. All right, that's there. And then as frequent revisions, we revise in class also. You'll have to revise at home also. And my intention is that let's finish tax here only. Yes, so let's understand the concepts, write the notes, do the sums, try and finish. And you also on your own try and do the chapters as and when they're over. You revise them and come to class. 5 hour class, half an hour revision is more than enough. Yeah, for now. And as in you go ahead towards May, keep increasing your hours so that you reach a decent number of hours, and so that you have to only give one attempt. Guys. That should be the idea. Yes. So that's how I also teach, guys. My entire tax goes through an example of a story. So there is one story of a surgeon, and through that surgeon's example and through that surgeon's life, we learn different chapters of tax. So that's going to be my intention. It just works very better in a better way. Also, it helps you revise faster with the illustration in your mind. So that is going to be how we work, and I'm only looking at DT for this batch. So only direct taxes is what I'm going to be looking at. Yes. All right. So, and of course, I don't have to ask you all to please ask questions. If you have doubts, that happens automatically. If you have a doubt, make sure it's clear. First, ask your neighbors. If they don't understand, they're also confused, then ask me. And let's together clear every doubt that we have in tax. Also, while we're learning tax, guys, it's a great way to how to save tax, how to cheat the government, how to fool the government, how to not pay tax. But all that is not asked in the exam. In the exam, it's either black or it's white. So either you're doing something wrong or you're doing something right. There is no gray, there is no in between. Yes. So although in real life there is a lot of in between, but we'll save that for articleship and post. In our exams, it's always and always black or white. Yes. So those are the colors that you also should be looking at. Um, Today morning we did some good amount of stuff. So we are going to start with you guys as well. So cutting the imaginary ribbon and inaugurating a direct access now. Yes. All right. So how are we going to be looking at? I'm just going to tell you a little, some details about how tax runs. Guys. Okay. So tax is which paper number for you? Which group? Group one, guys. What is the group one? And paper number, guys. Paper number three. So paper number three, that is tax, and tax is divided in two parts. I'm sure you guys know about it. What is it, guys? One is direct tax and one is indirect tax. Yes. Direct tax earlier used to be how many marks? 60, and indirect tax used to be how many marks, guys? 40. But then the government realized that this is like a stepmotherly treatment. Yeah, one is getting higher, one is getting lower, and honestly, both contribute equal to the government. So the government gets equal money. It's high time they give equal marks also. So they decided to cut down DT to how many marks, guys? 50, and to increase IDT by how many marks, guys? 50. So now there is no discrimination. Yes, they contribute equally, so they get equal number of marks as well. So a slight change there on our portion. IDT has some change in portion. DT, there's no change in portion. It's the same portion. So there is not much difference in DT. Uh, I'm sure you're aware, guys. MCQs is how many marks? MCQs are 30% or 15 marks, and the remaining are descriptive questions, which are basically 70%, which are 35 marks. So that is going to be how we look at the portion and look at the paper pattern. Now, guys, want to understand, we'll take it from the base, whether you attended a few lectures, I can see a few familiar faces. So whether you attended the lectures or not, doesn't matter. We'll take it from the base and we'll keep building up there. Yes. So in India and many countries and most countries of the world, guys, there are two types of taxes, DT and IDT. Yes. Let's try and see if you can tell me some differences that you know. Guys, DT is when do you pay direct taxes, guys? When you earn income. Guys, direct tax is when you earn income. That's why as a student, guys, you don't pay any income tax or any direct tax. when you start your first job, that's when you'll start paying your income taxes. So DT is a tax on your income. Whereas IDT, which is called indirect tax, is not on your income. It is on your consumption, guys. It is on your consumption. Watch a movie, pay IDT. Come to Yesh's Academy, pay IDT. Go to a restaurant, pay IDT. So it's basically on how much you consume. The more you consume, the more you pay IDT. Guys, the government gets how much from DT? How much percent? Around 50% of their money comes from DT. And what about IDT? Of course, around again 50. So it's a fair share, 50% from both. Guys, DT is great because it is progressive. What is it, guys? Progressive. Now, what is this progressive? Articleship, no tax. First job, some tax. Second job, even more tax. Partner in a firm, even more tax. Yeah. So progressive means the more you progress in life, the more DT you need to pay, which sounds good. Like when you sit there, oh yeah, progress, and but when you actually pay it, right, really feels slightly bad because all the money going out of your bank account. But guys, it is progressive. What is the word? Progressive. What do you mean by progressive? The more you earn, the more you pay income tax or direct tax. But IDT is nothing like that. The poorest person also is buying that Colgate toothpaste, a small packet maybe, and a rich person is also buying that big tube of Colgate, and both of them are paying what, guys? IDT or GST in India. And hence, guys, this is regressive. What is the word called? Regressive. Regressive means even why should poor people pay tax? But this guy, IDT, has made sure that even the poorest person pays taxes. So unfortunately, regressive. Regressive means it pulls people back into poverty. Yes, but progressive is basically nice thing. Rich people pay a lot of taxes. Poor people don't pay a lot of taxes, which is good. Yes, I think that's a good thing. So DT overall, the philosophy of DT is really nice. It's honestly like a superhero who takes money from the rich and gives it to the poor. So this is really nice. IDT, of course, the philosophy is little regressive, but the government can't help it, guys. They need money. Yes. And guys, how many people do more people pay DT or do more people pay IDT? Take for example a class only, guys. Here, all of you all are paying IDT, including me. So it has a wider base, guys. What is the word? Wider base. Whereas DT, guys, has a narrow base. What is the word, guys? Here, narrow base basically means fewer people pay direct tax in India. Although the number is increasing, but still it's fewer as compared to IDT. Everyone pays IDT. Yes, everyone okay with this? All right. So this is DT, this is IDT. I'm not going to tell you why the government collects taxes. You know why the government collects taxes. They need it. Guys, in fact, there were countries which never collected taxes. Like people who were living in UAE, Dubai, UAE. Guys, did they ever have taxes? No. Are you aware? UAE did not have any taxes, but now they are also introducing in a very slight, small manner. They've introduced tax, and it's only going to go higher. So every government feels that if you're managing you guys, or if you're running a country, we need money, and you guys have to pay us tax. Are we okay? All right. Now, what is the example of DT, guys? Income tax. What is the example? This one, income tax. And what is the example of IDT, guys? GST. So these are two examples. The biggest DT in India is income tax, and the biggest IDT is GST. All right. So now let's move towards income tax. And income tax comes from an act. Guys, anyone? Income Tax Act 1961. Guys, dinosaur. 1961 Act. We don't use an app which is not updated. Our app requires every month update. Yes, every time you open Uber or Zomato, etc., needs an update. How are we running a country with a 1961 Act? And by the way, income tax rules are of the year 1962. How are we running a country with such old laws, guys? Any idea? Yes. GST, by the way, is just 5 years old, 6 years old. This is so old. So what they do, excellent. What they do is, guys, the finance minister, every year, last day of January, guys, she comes up with an iPad, a briefcase, etc. Poses for pictures first. And every year, every finance minister does that. And they go in the parliament and they announce amendments. What do they announce? Actually, it's not called amendment, it's called a finance bill. Guys, what is it called? Popularly called as budget. Popularly called as budget. A CA will not get so excited for his or own birthday, but on budget day they go mad. Like there's a different person, or that CA is like, oh, budget day, budget day, budget day. My dad's a CA. I think he's never got so excited after I think he got married or he had kids, like he gets excited on budget day. Oh, today is budget day. Everything, every whole world revolves around budget day. So on budget day, it's called a finance bill. What is it called? But guys, once the members of parliament give their approval, it's called the Finance Act. What is it called? Finance Act. And guys, which year are you going to give the exam? 2024. So your, and which month? May. So which is the latest Finance Act? 2024. Guys, Finance Act 2024. But guys, this is wrong. The Finance Act 2024 has nothing to do with your exams. In fact, that's a lot of unnecessary, craziness, madness that day. All students who are studying for CA, suddenly they feel the pressure that, oh, Finance Act has come, it will apply to my exam. This is the question which is, guys, please relax. Your Finance Act is Finance Act 2023. Which Finance Act, guys? 2023 means you need to go 1 year back. And is the Finance Act 2023 already out? Guys, I want answers. Is it already out? Yes, the Finance Act 2023 is already out. It's right now already there. It's included in your book already. So if someone tells you, listen, Finance Act 2024, did you study? Please tell them to relax and you also relax. Which act applies to you? Finance Act 2023. Is it already out? Yes. So calm down. Relax. We anyways have too many things on your mind in the month of March, April. Don't add too many things otherwise. Yes. So anyone who spreads those kind of rumors, guys, please block them. Yeah, we don't need that kind of mad rumor mongering because it happens. No matter how many times I tell people, suddenly I'll get messages on that day. That's a Finance Act. Will it come in our exam? And I'm like, no, no, it will not, because guys, you get to 1 year back. Are we okay with this, guys? So, which is the Finance Act 2023? These are two acts, one rules. This is applicable for your year. Now, um, that's it. And which ministry takes the money, guys? Ministry of Finance. They collect the money and they have a body which helps them. They have many people who help them, income tax officers, etc., who help them collect the money. Yes. All right. Guys, if you don't travel with a ticket, if you go in the train without a ticket, who catches you? TT, same mechanism, guys. There's the income tax officers who catch you. If you try and act very fast, funny, and don't pay tax, they'll catch you. Yes. So all that catching bit, etc., is at CA fine. Till CA enter, we don't have all of that. We just have how do we pay our taxes, etc. At CA final, we see how they catch you. All right. Now we move ahead, guys. In India, and India's tax system is amazing, guys. It's been amended so many times. There are so many, things here and there that if you understand India's Income Tax Act, any country of the world, you can understand. Yes, everyone. It's like, if you give CA exams, BCom exams, yeah, easier. Same way, guys. India's income tax, if you understand, all income taxes of every country become smoother. Anyways, now moving ahead. Guys, in India, do all of us pay the same tax? Like, does Yashas Academy, does Reliance Industries, does DMart, does BBMP, does Tirupati Trust, all of them pay the same taxes? No. Guys, it all depends on who you are. It all depends on who you are. So we are now talking about different persons, guys. Please repeat, whom are we talking about? Different persons. And when I tell you different persons, most of these persons you already know. We're just looking at them from a tax perspective. All right. So let's start, guys, talking about different persons. And let's talk about you. And let's say you become an architect. All right. So please tell me, as an architect, can you start your own proprietorship firm? Guys, tell me, as an architect, can you start your own proprietorship firm? So who are you that time? You are an individual. Guys, please repeat. Who are you? Individual. Do you earn money? Will you have projects? Will you make nice houses, etc.? And will you charge them money, guys? So do you have income? And who will pay the tax on that? You yourself. You will have a PAN. You will have PAN. Most of you already have a PAN, and you will pay your own taxes. Are we okay? That's an individual. Guys, can minors also have income? Not allowed. So that kid works in a movie. What is he pay? What is he given, guys? Clothes and chocolates. So guys, minors also have income. Minors, majors, male, female. Guys, everyone are included individuals. They all earn their own money. They all have their own PAN and they pay their own taxes. All right. Next, guys, can you have a HUF who earns income? First, HUF, guys, Hindu Undivided Family. I've never had a problem with full forms. Everyone knows full forms so well. Hindu Undivided Family. Now, Karta, Kupasna, we don't have to do all of it. Yes, we have to look at it from a tax perspective. Guys, can a HUF have income? Yes, yeah. So I'll talk about my HUF back in Mumbai. We have an HUF. There's money in that HUF. We made a FD. What have we made? FD. And what do we earn on that FD, guys? Interest. So who pays the tax on it? My father, because he's a Karta. On me, who pays the tax? Karta. Looks like it's the Karta who pays the tax. No, guys. The HUF has its own PAN number. If you didn't know, now you know. As HUF has its own PAN and HUF pays its own. Of course, we use their bank account and we pay. Of course, HUF, there's no real person. But guys, did you know HUF has its own PAN? So tomorrow, when your family member says, listen, let's start a HUF, guys, you'll have to apply for a PAN and you'll open a bank account and you'll pay taxes from that. Are we all good, guys, with this? Yes. So please tell me, what is HUF? Will it have its own PAN? Yes. And will it pay its own taxes? Yes. Next, guys, you become slightly bigger as a business person. So will you need others also? And others will enter into what? Super, guys. You became a partner in a partnership firm. Guys, as a partnership firm, guys, can your partnership firm make money? Like while I am in Bangalore, guys, my partnership firm is back in Mumbai. There are clients, there is work done, there is billing. So does it make money there in Mumbai? Yes. And who pays the tax on it? Which partner? Working partner pays the tax, non-working partner pays the tax. Firm. Guys, partnership firm has its own PAN and they pay their own taxes. So yes, guys, partnership firm also is a separate tax identity. They pay their own taxes. Yes. And once they paid their taxes, what happens to the profits we get? We'll talk about it moving ahead. Right now, only from a very brief tax angle. Guys, similar to partnership firm, we also have LLP. Guys, are they different? Yes, guys, more confident answers. Are they different? Yes, they are different, guys. LLP is completely different, but from a tax angle, they are the same. So good job. Guys, whatever applies to whom? Partnership firm also applies to whom? LLP, guys. They are the same from a tax angle. Are we okay, everyone? Everyone. All right. Guys, you've grown very big. Now you want to go to Shark Tank and get investors also. So you will register yourself as what, guys? As a company under which act? Companies Act, which one, guys? 2000. By the way, did you know there was an old Companies Act also? Yeah, so now be prepared, guys. There will be a new income tax act also very soon. Yeah, and don't get worried, it's going to be even better. It's going to be shorter, smaller, and very sleek. Yeah, like the old computers we had, and now, guys, better, right? Same way, same way. Old mobile phones, no, they were smaller and this is bigger, but yeah, you get the point. It will be sleeker and smaller. But anyway, so company is registered under which act, guys? Indian Companies Act, which year, guys? 2030. And if it's a foreign company, then it's not registered under this act. Yes. Foreign company also can do small minor businesses in India. Like example, Tesla can sell some cars in India. They can import the cars and sell, etc. Some. But so Indian company and foreign company. Now please tell me, guys, who will pay the tax of the company? Excellent. This is very obvious, guys. They have their own PAN and they pay their own tax. Excellent. Now we move ahead to the next person. Guys, let's say me and another faculty and another faculty, three faculties and Yesha's Academy. Four of us are going to do crash courses across different cities of India. Yes. And we've taken fees from students and we made money also, profit also. Now tell me three faculties and one partnership firm. Yesha's Academy is a partnership firm. If you all didn't know, I'm telling you. So please tell me who will pay the tax on that? Partnership firm. So what about us? And if three faculties are confusing, only me and Yesha's Academy are doing that. You tell me now. Guys, who will pay the tax? Tax we'll have to pay or not? Guys, we'll have to pay. Okay, that is understood. Now, who has to pay the tax? Academy or me? Both, then double tax. That's not right. One time people don't want to pay tax, double people will not pay. Who will pay? Academy. Guys, this is called an AOP, Association of Person. Repeat, what are we called? AOP, Association of Person. Guys, unfortunately, it's a different new entity, but you'll have to by heart it with me here. AOP full form, guys. Association of Persons. It can be any person. Who am I? Individual. What is Yasha's Academy? Partnership firm, and we've done collaboration together, guys. That collaboration is called AOP, and the AOP will have to apply for its own PAN and pay its own tax. But why haven't we heard of it? Because in real life, it is very rare. AOPs, they don't work well. So what people generally do, they enter into a partnership. So me and Yasha's Academy will say, okay, Yasha's Academy, we'll do 50-50 partnership. What partnership? 50. And the moment we agree on a number, guys, moment we agree on what number? Profit sharing ratio. Repeat, what number do we agree on? Profit share. This EOP will become a partnership. Guys, everyone, please tell me here, what is EOP? Can any persons collaborate together? Yes. And can they make money? Who will pay the tax? EOP. But in real, we don't see it because, guys, most EOPs have a profit sharing ratio. And the moment you agree on a profit sharing ratio, EOP converts into what? Partnership. Are we okay with this, everyone? All right. So when I was taught AOP, I was just given a definition which is never asked in the exam, guys. But you need to know practical understanding of what an AOP is. Let's now move ahead. Let's say, guys, these four girls here, they stay in the same apartment complex, and they were taking care of a very old neighbor of theirs. And that old neighbor, they used to really take care of, and really take good care. And when that old neighbor was no more, in his will, he wrote that his apartment now belongs to all four of them together. Yes. Now that apartment, guys, is given on rent and they are earning rental income. Which person will pay the tax? All four of them. How they will divide? Equally means you're assuming. What if she took more care? Excellent, guys. This is called a body of individual. What is it called? Body. Everyone repeat. What is it called, guys? Body of individual. This does not happen, guys. AOP is planned. AOP is planned. Me and Yasha's Academy planned it, but this is not planned. This is because of law. This is because of that will. This is because of that law it happened. Now, guys, who will pay the tax is not any of these four. The BOI will pay its own PAN and will pay its own tax. But again, we've never heard of BOI in real life. That's because, all four of them will say, okay, listen, let's do 25%. So what are they agreeing on? Profit sharing ratio. So BOI also becomes what, guys? So now telling you guys, AOP and BOI, full form. Association of Persons, Body of Individual. Guys, do they have their own PAN number? Yes. Do they pay their own taxes? Yes. But why aren't they very common in India? It's because the moment most of them, guys, they agree on what? Profit sharing ratio, and they become what, guys? Partnership firm. Yes. So, guys, it's very uncommon to see these, and this is planned. And what about this? By law. Automatically it happens by law. That's why BOI comes. Are we okay? Guys, and one last person. Guys, please tell me a BBMP. What is BBMP? Your Bangalore municipality. Guys, a Tirupati trust. Guys, all these people, do they also get money? Yes, BBMP way municipal tax, guys. Municipal tax goes to whom? Municipality. They earn a lot of money on that. Of course, they have a lot of expenses also. What about Tirupati trust? Guys, do you think people donate money? Yes. I'm not saying it's taxable, guys. Just answer what I'm asking. Do they get a lot of money? Yes. Tirupati trust is so rich. VBMP is so rich. Mumbai municipality is so rich. They get so much money. Of course, they don't land up paying too much taxes. But if they were to pay tax, I'm saying if, then they will be called an artificial juridical person. Repeat, what will they be called? artificial juridical person. Are we okay? Now don't tell me guys, oh Tirupati tax will not pay tax. I know they'll not pay tax. But if they were to pay tax, they would be called AGP. Are we okay? These are all different guys. These are all different persons, and each of them has their own PAN and pays their own. Are we okay? Everyone, these are different persons. But let me tell you something about your May 2004 exam, 24 exam. In your 2024 exam, when you open your paper, no, you will see only one person throughout the paper. Any guesses which individual? Throughout the paper, you will only spot this one hero, which is individual. Mr. A, Miss B, XYZ. Basically, only and only individuals, no companies. At CA final, you'll see all of them. But at CA enter, you only and only see this one person who is individual. So mentally prepare yourself that you want to know about everyone, but main focus should be on whom, guys? Individual. Are we okay? And these are different persons. All good. Let's take around, look around, guys. Yashas Academy is what? Partnership firm. My CA firm is a partnership firm. My lectures, I run it as an individual, and SMAT is my brand, and I run it as an individual. UD could be, yeah, Upar Darshini could be individual, could be partnership firm. We'll have to check. But whatever it's written up below UD Private Limited, UD Refreshments Private Limited, then it's a company. So everyone chooses depending on how they want to structure, and they choose to draw, make entities like this. All right. So these are different persons. And let me introduce you to the person whom we are going to be speaking about the most in our DT lectures. And that person, guys, is a surgeon. Guys, who is he? Surgeon. White coat, stethoscope, all that. Yeah, he's a surgeon. And we are going to just talk a little bit about him. In various chapters, we'll see him and we'll meet him. But guys, just a little bit about the surgeon, guys. Of course, he is doctor. He's a doctor. And he took up his first job very early at the age of 15, guys. What did he take up? A job. At what age, guys? 15. Just understanding a little bit about his life. So he wanted to earn money early, and I can understand because even I really wanted to start working early. So I can understand that how early he wanted to start working. That is age of 15. He took up his first job. What do you earn in job? Money. He saved all of it. Wouldn't spend. Saved. And at the age of 22, guys, how old? Congratulations, guys. He bought a house. Guys, at what age? 22. He bought his house. Next, guys, after working in a job for many years at the age of 28, at what age, guys? 28, he said, enough of working for someone else, I will start my own clinic. What did he start? Own clinic. Full, you can go visit him. He'll say, take an appointment, he'll charge you a fee, you pay. Full clinic, proper clinic. And guys, many years of working. When did he start? 15. So 10 years, 20 years, 30 years later, guys, at the age of 45, he said, enough. 30 years I've worked so hard. Now I'm only going to buy and sell shares. I'll buy some land in Bangalore, sell it after a few years. So, guys, he decided to do all passive income. Not work hard. Buy, keep, sell. Buy, keep, sell. And last, guys, at the age of 56, what age, guys? He said, now I'm not even going to do that. I'm only going to put all my money in a bank and earn what? Interest. On the shares, I will earn what? And every month, I'll go to Goa and gamble. Yes. Everyone okay with this? Yeah. So, this is his life story. And we will meet him very often. Every chapter is about him only. Yes. Every chapter is about him and his life story. Hmm. So here, guys, this is a little bit about the surgeon. We'll meet his brother in the next chapter, his father, his wife, children, yeah, everything about him in different chapters. All right. Yes. And now, guys, we move to the continuation of this part only. Guys, let's say someone knows that you are doing CA inter, some relative, and they know that tax has started already. They ask you, what are you doing? Tax, I go for tax classes 5 hours every day and all. Full, I'm learning tax. They say, okay, sit down, tell me, how do I pay my taxes? So you tell him this, what I'm telling you right now. Yes. So you tell that relative, that first relative, you tell me your legal status. You tell me what? Because for every person, the tax is different. So you tell me what? Your legal status. Everyone. So the relative will say, oh, listen, I have a HUF, I have a family business, I have a company. So you will find out the legal status of that person. For the surgeon, guys, what is the legal status? Individual. Guys, more replies. Please tell me what is the legal status of the surgeon? What about y'all? What about me right now? Individual. What about Yesh's Academy? Partnership firm. Okay. Once you know the legal status of the person, guys check whether he check for his residential status. Guys, what will you check for? Oh, residential status means, guys, if you are very often in India, means all of us, we are mostly always in India, we are residents. Who are we? Residents. My real sister got married and she moved to Australia. So today, if I check, she is what? Non-resident. Sundar Pichai, non-resident. Elon Musk, non-resident. So, guys, residential status we have to check every year. Repeat, we have to check. And you can either be a resident. Repeat, you can either be a resident or you can be a non-resident. So, every year you have to check. Yes, simple, guys. If tomorrow my sister comes back saying that, listen, I'm moving back to India, then in that case, what will she become? Resident. If Sundar Pichai says, I'm coming back to India, starting Google India and heading Google India now, only that, then resident. So, you have to check which year, guys. You have to check every year. And you were surprised to see that whoever as a resident, is a sad face. Whoever you meet as a resident is a which face, guys? Sad. They're sad about something we'll know soon. And whichever non-resident you meet, very happy. Are you okay? Resident, sad. Non-resident, happy. Why? You'll know soon. And let's talk about the surgeon, guys. Where is a surgeon almost always? In clinic, but in India only. Yeah. So yeah, clinic. Yeah, yeah. So he's in India, yes, in his clinic, and hence he will become what, guys? Resident. Are we okay about this? So first step, legal status. Second step, residential status. All right, what next? Guys, once you get to know residential status and legal status, then check how many incomes do you have. Check how many incomes do you have and which of those incomes can be taxed in India. Example, guys, let's talk about me. Yes, my income from classes. Yeah, my income from clients, my share income, taxable, my interest and dividend, taxable. Guys, let's talk about Sundar Pichai. Sundar Pichai heads which company? Google. His salary from Google in US. In India, is it taxable? Why India? Why? What do you want from it? Guys, India can tax it. Guys, please more confident answers. Elon Musk's salary in US taxable in India? No. But if Sundar Pichai has a house in Chennai given on rent, taxable. So you define the scope of income. Guys, please repeat. What do you define? Those incomes which are within India's scope. Right? Scope of income means those income which are within India's scope, which can be taxed in India. You will learn this soon. Guys, all this is just I'm just introducing you to them. Each of these you will learn ahead in more detail. So first, what is the first step? Next, second step. Next step, scope of income. Are we okay with this, guys? Scope of income. And this scope, guys, you can have 15 incomes, but which all are taxed in India will come in India's scope of income. Yes. All right. Now, guys, typically when you go home or in your house, maybe you have a separate living room where people sit and catch up with each other, watch television. You have your own room, bedroom. You have a kitchen. You have a bathroom. You have a balcony. Guys, are they all separate? Yes. Same way in scope of income or in India income tax, there are 5 rooms. Guys, please tell me how many rooms? 5. And every income that you earn will only go into one of these 5. Yes, everyone okay with it? Everyone, how many rooms, guys? And no matter what you have, whatever can be the income, tomorrow you just wake up and you see yourself win a lottery, one of them. You take up a job, one of them. So there are only and only five rooms, guys. The first room is called salaries. What is the first room? This room you will open only when you get a job. Guys, right now for you, is this room open? No. In fact, even I also don't have a salaried job right now. So for me also, is this room open? No. So you will open the room only to tax what, guys? Salaries. Next room is called house property. Everyone, what is it called, guys? House property. That means, guys, can you buy a house and can you give it on rent? Repeat, can you buy a house and give it on rent? Where will that income go? Which room, guys? House property. Yes. Next, guys, can you have a business? Example, selling like coffee. And can you have a profession? Example, doctor. Yes. Both of these, although are different, guys, they are taxed in the same room, which is business and profession. Third room. Fourth room, guys, when you have assets, example, gold, shares, land, and you sell them, buy them, sell them, hold them, etc., and you make money, guys, which room will open up? Capital gains, because they are called capital assets. Fourth room. First room, second room, third room, fourth, and fifth, guys, is like dustbin, where you can put anything in that, and that's called other sources. What is it called, guys? Other sources. And guys, any income that you have of you, of DMart, of Mukesh Ambani, of anyone in India, guys, will only be in these four, five heads, five heads. Are we clear about it? Yes. Now, I want you to make you understand a very fundamental rule of tax, and that comes from friendship. Yes, even in friends or relatives. Guys, if you go to a relative's house and you take a big box of sweets, when they come to your house, they'll also get something. Yes. If you go to your friend's birthday party and take a nice gift, when you call that person for a birthday party, guys, mainly, more or less, guys, if he's, a decent friend, he will also get a gift. Yes. Not talking about your friend particularly, whom you're thinking about, but guys, generally, they will also reciprocate. Guys, this is called give and take. What is it called? When you give, you get. Repeat. When you give, you get. But guys, your friend called you for the birthday party. You went, you ate the most, you finished everything, and you asked for more. And guys, you came back, no gift, you only said thank you for the party, emojis. Guys, will you expect a gift from them again? No. So if you don't give, you don't get. Something like that happens in tax also, guys. I'll give you my example, guys. Everyone, please watch and please listen to this very carefully. I'm in Bangalore for lectures. And let's say, whatever income I earn from the lectures, guys, am I benefiting from it? Yes. So the government says we also want to tax it. So I say, no problem, government. I know that tax works. So I'm offering my income, guys. What am I offering? Income. Let's say income is 20 lakh rupees. So I offer it to the government. That government here is 20 lakh rupees. Not don't take the whole thing, but take whatever you want as tax. Guys, what am I offering? Income. So that the government can tax. The government takes it, that tray of a 20 lakh rupees, and gets tears in their eyes. Happy tears. Saying that you're giving me income so that I can tax it. Wait, wait. I'll also give you something. To earn this income, repeat, to earn this income, Saurabh, whatever expense you made, you tell me, I will give you a deduction. That means what? That means from Mumbai to Bangalore, did you come by flight? How much did you spend? I said 5,000. We can minus 5,000. Then here, did you go out? Did you eat? Did you stay in a hotel, etc.? Whatever expenses are tell us, I said, okay, my total expenses were 5 lakh rupees. Example, how much my total expense? 5 lakh. So the government says, okay, if you offer me income, I will give you what, guys? Deduction. And so they will tax me only on how much, guys? 15 lakh. So I am offering them income. They are happy. They offer me deductions. I am happy. This is give and take. Now let's talk about you guys. I've recharged my phone. Can I minus that also? Office phone. Can I minus that? I've recharged my office Wi-Fi. Can I minus that? Yes. Now let's talk about you guys. As you also recharge your phone. For online lectures, you also recharge your house Wi-Fi and you also spend 10,000. Can you take a deduction? Guys, think about it. Can you take a deduction? The answer is simple. No. Why no? Because you're not offering anything to the government. When the day you start offering, you'll get deduction. Are we okay? Guys, please tell me what relationship is this? Give and take. When you give, you can take. If you don't give, can't take. It's as simple as that. As simple as that. Yes. Guys, whatever I spend in Bangalore, if I can justify it's for my lectures, including this coffee I'm having, guys. If I can justify that it's for my lecture, I can minus that expense. Of course, I don't go so minute and minus it, but if I want, I can. Because this is helping me take a lecture better. So I can minus it. Are we getting the point, guys? Yes. So I can minus whatever I want if it's connected to what? Guys, I take a trip to Kurg for a weekend. Can I minus that? It has to be connected to what? My income. If it's connected to my income, I can. Are we okay with this, guys? Yes. Now let's apply this same here, guys. How many heads of income do you see? Five. How many rooms do you see, guys? These rooms are basically where all the incomes are. So they're called heads of income. How many heads of income do you see, guys? Five. In each head, guys, you are offering what? Income. The government is offering what? Income reduction. Income, income reduction. In each room, you offer income, the government offers reduction. Guys, I'm not offering salaries. I don't have a salaried job, so I'm not opening which room. The government will not give me deduction. So each room has what, guys? Income and deductions. Are we understanding, everyone? Everyone. I take a trip to Kashmir with my family, guys. Can I minus it? No, but it'll help me refresh. So then I can work better. No, it has to be a direct connection. It has to be a direct connection. Are we all good? Everyone, everyone, everyone. So these are called incomes and they're called deduction. And how many heads of income do we have, guys? Five. Let's say, can someone have all five heads of income? Think about it. Yes. In fact, your aim should be that. That someday, let's say I should have all five heads of income. Why not, guys? As a CA, so easy, I'll tell you. Take up a job. What do you get? Salaries. Save in Bangalore, you can still buy a nice house, guys. Not very difficult. Yes. Buy a what? House, give it on rent. Next, guys, on the side on weekends, try file returning returns for people. As a CA, you can file a lot of returns for people. Yes, what is that? Professions on the side. Next, buy shares, sell shares. What is that? And buy some shares which give you what? Dividend income. You're making all the five heads. Is it possible? And is it legal? Yes. Guys, let's imagine each head at 2 lakh rupees. 2 lakh rupees from each head of income. Total how much, guys? 10 lakh. And this 10 lakh, guys, if you gone to a petrol pump and fill oil in your Activa, you know what I'm talking about. It will go into a funnel. Remember that you pour oil, it's a funnel. So it will go into the funnel. Yes. Can we repeat the steps till now, guys? First step, second step, third step, scope of income, whichever incomes can be taxable in India, and how many heads of income, guys? The first one, what if I don't have salaries? Don't open that room. That room is always there for everyone, but don't open it. Next, what if I myself stay with my family? Don't open it then, no problem. Next, capital gain and other sources. Guys, let's say each of them have 2 lakh rupees. So total how much, guys? 10 lakh. And that 10 lakh, guys, goes into a funnel. Now we go to the next step. Guys, just asking you generally, do we like earning incomes? Yes. Do we like earning incomes? Yes. But do we like paying taxes? That's something we don't like. So let's say, guys, today, and genuinely, let's say I want to make an FD of 5 lakh. How much? 5 lakh. I want to make an FD, 5 lakh. And if I earn interest, guys, will I be taxed? And I'm already taxed at a high rate. So I call up my real brother. Let's say 16 years old. I tell him, listen, Do you have a bank account over? He's like, yeah. I'm like, you have income? He's like, what income? Only expense. 16-year-old college, only expense, nothing else. I've taken money from everyone possible. I wish I had some income. I said, okay, let's do one thing. I want to make an FD of 5 lakh rupees. I'm putting that money into your account. Don't touch it. Make an FD of it immediately. Go to the bank, tell them I want to make an FD, and the interest is mine, not yours. He says, okay, okay, understood. You're saving tax. I'm like, yeah, I'm saving tax. So I parked the income in his bank account. How much FD did I make? On that 40,000 interest. Who gets it? No. It goes in his account. Guys, his whose account did it go in? His account. Does he have any other income? No. I'll not be taxed on it because he'll not be taxed because very low income. Saved, fooled the government. But guys, when you stop thinking, the government starts thinking. They've already thought about it. So they say, listen, very smart. Whose money is it? Mine. Guys, whose money is it? Mine. The government says if it's your dog, no, the dog will come running back to you. In reality, also, guys, your dog comes running back to you same way. Your money. How much did you send him? 5 lakh. No, no, 5 lakh can remain with him. But that 40,000, who earned it? The brother. Guys, who earned it? But it will be taxed in whose hands? Mine. So 40,000 will be removed from there only for tax purposes and put in my income and I will pay tax on it. Guys, will he also pay tax on it? No. Only one person will pay. Who will pay? Me. And why am I paying the tax? Because the main amount was given by me. Are we okay? Instead of FD, guys, say let's say I buy a house in his name. Can I buy a house in his name? Yes. And rent the house. Income will be taxed in whose hands? He will earn it, but it will be taxed in my hands. Are we okay, guys? Imagine, just remember, a dog goes back to his owner. Are we clear about this, guys? And this is called clubbing of income. What is it called? Clubbing means adding. Clubbing, repeat, guys. What is clubbing? So his income is added into mine. Guys, technically, please understand 40,000 will still remain in his account only. Only for tax purposes, it will be added and I will pay the tax. Are we clear with this? Guys, what is this called? Clubbing of income. All the spectators who've come to watch an IPL match, guys, please participate. This is not a match, this is your match. You have to participate. Please tell me what is this called of income. I still see a inter clubbing means going on a Friday night out partying. Yes, but now guys, this is a new club. Yes, clubbing of income. Someone income is added into your hands. That's called clubbing of. Are we okay? That's the next step. Now we go to the next. Guys, can a person have two businesses? Yes. Can a person have two businesses? Let's say in one business, you have a profit of 100. How much is the profit? You are expected to pay tax on it? Yes. And on another business, there's a loss of 20. How much is the loss? So the first time the government is thinking for us, the government says, don't worry. How much money you made? 100. How much loss you made? I will allow you to set off. I will allow you to set off. Repeat, guys. I'll allow you to set off this 20 so that you will pay tax only on. First time the government is thinking from our angle. How much is my profit? They said, no, 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 don't worry. I'll tax you only on 80. So on paper, is it lower? Yes. And tax I pay lower. And that's a great thing. That's called what? Please tell me what is it called, guys? Set off of losses. The government says, I'm with you when you make profit. I'm with you when you make losses. Guys, someone gets a cake for you at home, big one. You try to finish it, can't. 1/4 you finish, 3/4 is left. What do? Put it where? Fridge and consume it when? Next day. Next day you can't consume. Day after. Yes. So you can consume it for a few days. Maybe guys you forgot about it. And after 3-4 years, guys, one afternoon you said, Mom, I want something sweet. She's like, oh, 1 minute. She removes that cake and gives you. Remember 4 years back? Guys, will you consume it? Same thing happens in tax. Guys, My loss is not 20, my loss is 110. How much is my profit? 100. I can set off in this year only 100. So what happens to that 10? That is carried forward. That's called what, guys? And next year, guys, it will go, that's 10. And next year, my profit is 70. I'll pay tax only on what, guys? 60. This is called carry forward. So if you consume it this year, set off. Guys, repeat. If you consume it this year, if you consume it later years, carry forward and set off. Are we getting the difference, guys? One is called what? Set off. One is called carry forward and set off of lot rise losses. Yes. And guys, this is a very important thing because in reality, guys, we all talk about people who make profits. But please remember there are a lot of people and there are a lot of companies who make losses also. Air India, who owns Air India now? Guys, who owns Air India? Tata. Earlier, who owned it? Government. They are huge loss makers. So there is loss is a reality. But guys, can loss be adjusted like this? Yes. Are we okay? Guys, this is called what chapter? Set off and carry forward. Repeat, guys. What is it called? Set off and carry forward of what, guys? Of losses. So this chapter comes after clubbing. It is called what, guys? Set off and carry forward of what, guys? Losses. Okay. So let's say this funnel had 10 lakhs. How much? Clubbing of income 1 lakh, loss 1 lakh. So 10 plus 1, 11. 11 minus 1, 10. So we are back at 10, and this number is called the gross total income. Repeat, what is this number called, guys? Gross total income. In short, we call it GTI. And how much is your GTI, guys? 10 lakh. Are you supposed to pay tax on it? Guys, are you supposed to pay tax on it? Yes. Ideally, you're supposed to pay tax on this, but guys, wait for something. Yes. Guys, in India, a lot of the things that government should do for you, you do it yourself. Example, you fall sick, you are admitted to the hospital, who pays your bill? Yourself or your insurance company. But you only have to do it. Will the government pay? No. You've retired. You're 65 years old now. Who will pay you every month? Pension, but that is you only you planned it, right? So in India, guys, a lot of things you have to do for yourself. You have a kid in the family, so you have to save for them. So a lot of things you have to do for yourself, guys, and the government understands. Worldwide, it is different. Worldwide, the government takes care of you. Yes, in many countries, the government says, listen, you're not well, go to a hospital, we'll pay all your expenditures. In many countries. But in India, guys, we can't do that. Reason? Population. What are we? 1.3 billion. And that's official. So many kids not counted also. Some families so big, oh, forgot two of them, oh, to add two more. Guys, of course, in metro cities, you don't realize, but my parents, my dad is eight kids. Yeah, my grandfather, I tell him what? He said no television those days. Yeah. So guys, it's so funny because it's so many people in India, we can't take care of all of them. Unfortunately. So the government has come up with a very nice policy. The government says, listen, what is your income? How much is your income, guys? 10 lakh. You are expected to pay tax on 10 lakhs. But we'll give you a benefit. Take medical insurance. Take what? Just giving you one example. And for you and your family and pay a premium. Let's say your premium is 20,000. How much is your premium, guys? Who will pay the premium? You. You will only pay the premium. But the government says, listen, we want to give you an indirect benefit. What benefit? Look at the benefit, guys. They say, we will give you a deduction. What will we give you? Oh, but deduction we got on the heads of income. This is separate deduction. This is on the chapter called 6A. Guys, what will the government give us? Please tell me how much did you pay? The government will give you a deduction, so your income becomes how much, guys? Now, on paper, is your income reducing? Yes. So that means you'll pay lower tax. And that little low tax that you pay is an indirect benefit from whom? Government. Government says, sorry, yeah, I wanted to pay your 20,000, but we are so many, I can't take care of all of you. So you pay, I'll give you a indirect benefit. I'll give you a indirect benefit by what, guys? Deduction. This is called what deduction, guys? Deduction under chapter 6A. This is under chapter 6A. How much is that? Example. And finally, guys, the number that you get is the hero of the story, or the big number, or the main highlight number, which is called, popularly called TI. What is it called? Total income. How much is that, guys? So you will pay tax on 9,80,000. Are we okay? Can we just from clubbing, guys? What is that first? Clubbing. After that, set off. After that, set off and carry forward together. Then after that, GTI. Then deduction, and then, guys, total income, and you pay tax on this 9,80,000. Guys, when you go to McDonald's, when do you pay? Before eating, after eating? Before. UD? Before. They don't trust you, guys. You'll eat and run. Yeah. So before. But in five-star hotels, after. Full meal and then shop. Yeah. So guys, there are different ways of paying. Guys, there are different ways of paying. Can you use GPay? Can you use debit card, credit card? Same way, guys. Let's say on 9,80,000, your tax is 98,000. How much is your tax, guys? 98,000. The government says we'll give you different ways of paying. Some amount you can pay in advance, called advance tax. And some amount you can pay in. So you paid, guys, let's say 10,000 rupees in advance. How much did you pay in advance? 10,000. That's called what? Advance tax. Is it a different tax? No, it's the same tax, but different way of paying it. While you're earning the money, you pay some more called TDS, TCS. Repeat, what will you pay? This is while you're earning, and let's say you paid 18,000. So totally how much? 28. And is there some balance? Yes, self-assessment tax. What is it called? Pay the balance, that is how much, guys? So this is how you pay all your tax. And if you don't pay, they will recover it. We'll see at CA final. Yes. Everyone, so please tell me, are there three different taxes? No. There is only one tax, which is income tax. You paid in three different ways. One of them TDS, TCS, one of them self-assessment tax. Are we okay with this? Everyone across the room, guys. And please tell me, this tax, this income, these deductions in your life have happened. Who knows how much income you want? Guys, your life, who knows how much income you want? Your CA. And who wants to know? Government. So every year after the year ends, repeat, every year, like your report card, guys, after the year ends, you get a final report card. Same way here also. Every year, repeat, every year after the year ends, you will write a letter to the government. Dear government, it was a great year. Did you know I made so much, so much, so much income? Unfortunately, I have to pay so much tax. Here it is. You will file return of income. What will you file, guys? Return of income. Guys, all of us don't file it. You will file it when you start earning. But you have to tell the government by filing what, guys? Return of income. Are we okay with this? Guys, these are the steps you need to take to pay your tax in India. From the top, we will repeat it now. Guys, please tell me from the top, what is the first step to pay? Legal status. What's your legal status? What's the surgeon's legal status? Individual. What's the Issues Academy's partnership for? Second step, residential status. A resident is always sad. A non-resident is always happy. Why? We'll see ahead. But do you have to check it every year? Yes. After that, scope of income. All those income which are taxable where? In India. In India. Which will be parked in five rooms, guys. First, income from salary. Second, income from house property. Third, income from business and profession, but they don't call it income, they call it profits and gains. What do they call it? Profits and gains from business and profession. Next, capital gain. And last, other sources. They call it income from other sources. Guys, can I put my income in the sixth head? It's a very new income. Cryptocurrency. No. Any income be, it has to be in these five heads only. And every head has income and deductions. If you offer income, you get deductions. It goes in a funnel where, guys? First clubbing, first set off. Guys, alphabetically, what comes first? So that. First, clubbing, then set off. Clubbing is your dog. Will he run back to you the moment he sees you? Yes, in your lap only, guys, directly. Next, set off and carry forward of what, guys? Losses. Next, gross total income. It's a very useless number now. There was a time, guys, this gross total income used to be the one where you pay a tax. But now it's a very useless number because after that, what do you get? After that, what do you get, guys? Total income. That's the hero number now. On that, you pay tax. How do you pay your tax? Advance, TDS, PCS, self assessment tax. And finally, guys, this story you tell the government by filing what? Return of income. Now, guys, these are the steps. And some of them are chapters also, guys. So, guys, there's a chapter called residential status. Then, guys, these five heads are also chapters. Then, clubbing of income is a chapter. Set off is a chapter. GTI. So, useless, they don't have a chapter for that. Yes. Deduction. Yes. These taxes. Yes. One chapter only for all these three. And these are chapters, and this is your portion also of tax. Yes. Now, guys, it's time to understand that which act are we studying? Income Tax Act, and every act is divided into sections. Every act is divided into. So, do we need to by heart section numbers? Yes, that's a big question on everyone's mind. Yes, not all of them, but the important ones. And it's my duty to tell you which are the important ones. But guys, even the important ones, then people start asking, should I remember those also? Guys, my answer is always going to be yes. And your answer should be yes. Don't give yourself option. Trust me, guys, it's a human mind. The way you train it will get trained. No one thought we could sit at home for 25 days, but COVID happened, lockdown. We were sitting at home, not just sitting at home, playing Ludo and enjoying also. Yes, so please understand that it's a human mind. If you train it well, it will accept what you want it to do. So please tell me, will you remember sections? Yes. Let's try and remember five sections right now. Guys, when did the surgeon get his first job? 15. So section 15 is for what, guys? Salary. Yes. When did he buy his first house? So section 22 talks about house or income from house property. When did he start his business? 28. So 28 talks about profits and gains from business and profession. 45 and year 56. These are five sections. It's a good start at least right now. By heart these five sections here itself. Are we all good, guys? Yes. All right. I did not tell you guys, but this is your first chapter. And we're almost at the verge of ending the first chapter. Yes. So very small chapter. It's like a warm-up chapter. It's like how when you exercise you warm up initially, or how when you run a marathon you go very slow. So this is the first very smooth, very slow, and very easy background chapter. A few details. Please tell me, guys, when does a year start? First April. Guys, I'm talking about which year? Financial year. It starts on which date? And for your exam, the financial year, which will be there in most of your sums, guys, you'll see this financial year, 1st April 23. And when does it end, guys? 31st March 2024. Guys, this is the year, this is the opportunity to make most, and how much ever money you want to make it. You want to have a job, you want to rent your house, whatever you earn, guys, which year? 23 to 24. For your exam, I'm saying for your exam. 23 24. And now, guys, whatever happens in this year, The next year, repeat, which year? The next year, that is which year? 24, 25, the government will assess you. Assess means check. Assess means check. After the year ends only they can check you. So please tell me which is the year you earn income. And the government will assess you in which year. So this is the year you file your return, etc. And they'll check you. So that's called assessment year. What is it called, guys? What is the assessment year? 20. And guys, is this year before the assessment year? Yes, guys, please tell me, is this year before the assessment year? Yes. And that's why it's called very well previous year 23, 24. Yeah. And guys, the reason I'm stressing on these 2 years is because most of your exam questions will be previous year 23, 24 slash assessment year 24, 25. They mean the same. And how do you remember it? Is in continuation. What is the previous year? 23, 24 assessment year 24, 25. You earn money in this year, you get assessed in next year. Are we okay? And same thing, whatever money you earn in this year, you get assessed in which year? Same, but we are not talking about every year because this is mainly your exam year 23, 24, 24, 25. It's repeating the year you are assessed. What is that called? And before that is called. And what is financial year? Every year which starts on 1st April. Repeat, every which starts on 1st April is called what year, guys? Financial. So is this financial year? Yes. Is this financial year? Yes. And that 1st Jan, right? Where we go crazy New Year parties, 10, 9, 8, or calendar. Yeah. That in tax is not so important. Yeah, that's the calendar. Are we okay with this? Yes. Yes. Guys, right now, are you a person in tax? Are you a person, individual? Yes. When you start paying tax, you'll be called an assessee. You'll be called what? So, what is the journey from person to assessee? How do you become, guys? Person is all of you all here. When you start paying taxes, you'll be called what? Assessee. Are we okay, everyone? And we'll be writing notes. So, just I want to finish explaining just two small points, and then we'll start writing notes. Guys, back in Mumbai, or actually, let's talk about a company called Reliance. Guys, RIL, Reliance Industries, and this is Mukesh Ambani. Did you know how much percentage does he hold in this company? Guys, 50%. How much does he hold in this company? Any reason? He's decided. So, guys, he holds how much percent in this company, guys? 50%. And guys, me, I hold 50%, but not shareholding, profits. Guys, what is this? Profit sharing ratio in my partnership firm back in Mumbai. Guys, both of us are beneficial interest holders. What are we? Beneficial interest holders. Repeat, guys, what is this called? Beneficial holders. This isn't just a concept I'm teaching you right now, it will be used ahead. But guys, if you hold 10% or more, repeat, if you hold 10% or more in a company, 10% or more of what? Equity shares in a company, or you hold 10% or more of profits in any entity profits, guys, then you are called beneficial interest holder. And the same thing if it's 20% of what percent, guys? It's called substantial interest holder. What is it called, guys? Substantial interest holder. Guys, 10% beneficial, 20%. How do you remember? It goes gradually up alphabetically. B 10, S 20. Are we okay? So please tell me, guys, am I a beneficial interest holder? Yes. Am I substantial interest holder also? Yes. Changing the percentage, 15%. Only beneficial, 5%. Nothing. Only interest holder. Nothing else. Are we okay? That's it. That's the first chapter. Yes. Guys, now, how do we move ahead, guys? Every chapter, of course, this one is a very small chapter. When we finish a good amount of content or all the content, then we start writing. Yes. And then after every chapter, every part, every 2.5 hour session gets over, the last 5 minutes we revise or whatever we've done in that 2.5 hours. Yes. So it's now time we take a 2 minute breather. Yes, relax. And after that, just open up your books or handwritten one note. If you don't have that book, today a full scape sheet will work. But from tomorrow, guys, you need to have a book with you. Yes. Yeah. This won't work. AC. No. One second. You'll give it back. Very cold, is it? Yeah. Tax done in college. Yes. 6M. 6M. Fifth and sixth. Okay. GST and DT both. Oh, nice. Which board is this? Karnataka University, Bangalore University. Books collected, guys. They've given the books to you all. I'll tell you how to use the books, etc. also, but right now we don't need to use them. Yes. So look at the books, judge them by the size, write your name, keep them. All right. And guys, looking to copy. You all want a longer break? Yeah, we can afford it. Yeah, you all want 5 minutes? Yes. So we're going to start copying because we'll have to start copying all together. Yes. Okay. Take 2, 3 more minutes, guys, and then we start copying, and then we'll copy right till the end. Yes, we can start writing. The first day, I'll just introduce you to my handwriting also. I'll just read a few words which you can't figure. Yes. On a new page, guys, in a new book, preferably. Direct tax, income tax, paper 3. Is 50 marks, 15 marks MCQ, 35 marks descriptive practical questions. Yes, as neat as possible because this is going to be the book that you refer one day before the exam also. Chapter 1, Introduction to DT. Importance, we don't know yet. We'll fill this up blank later. Don't put a question mark, just like importance is dash. It's also called basic concepts, the chapter. Difference between DT and IDT. I've written the difference on a different sheet. So once you finish copying difference between DT and IDT, you stop here, guys. Everyone, difference between DT and IDT, you stop here. Don't continue, guys. Difference between DT and IDT is where you stop. All right. Guys, I'm just showing you the difference between DT and IDT. So you can write this after that. Difference between DT and IDT, and then just write this as a difference between. This is the difference. This is a tax on income. The first one, DT, is a tax on income. This is a tax on consumption. This is progressive. This is regressive. Yes, guys, can I end this here? Writing it. Okay. Done. Some people struggle with having one pen. I can see your one, two, three, four, five different pens, three different colors. Good. All right. So ending this here, moving now to the earlier page only, guys. Yes, this is where we started copying from direct taxes and all. We were at difference between DT and IDT. Now please move ahead. Income tax is governed by A and B. Income Tax Act 1961 and Income Tax Rules 1962. The Act is updated or amended annually to the Finance Acts slash budgets for May slash November 2024 exams. Finance Act 2023 will apply. Income tax is governed by Ministry of Finance and CBDT. It's a body which manages or overlooks tax. Central Board of Direct Taxes. Case laws, which are basically High Court, Supreme Court judgments. Uh, don't worry, they do not apply to CA Inter exam. We'll see them at CA final, but right now at CA Inter, they're not applicable. If you're still writing, I've scrolled over somewhere, just raise your hand and I'll know you're still writing. Okay. Legal status is where we are. First, legal status is individual. Male, female, minor, majors are all individual. Partnership firms, which are P firms for us, LLP, both are taxed in the same manner. Both require a partnership deed and profit sharing ratio. Then comes companies, Indian company registered under the Companies Act 2013, and foreign companies which are not registered under the Companies Act 2013. Yes. People who are watching the lectures again, some of you guys have attended DT before, and talking to you all specifically, I have a very nice way of saving time for you all. Let's talk in one of the breaks, and I'll tell you all how you all can save a lot of time. Yeah. So if you've seen these lectures before or heard me before here, and you have some notes also, I can save some time of yours. Yes. All right. Next is AOP, Association of Persons, which is created intentionally to make profits. Example, a CA class by faculty plus institute. Faculty plus institute. Next is BOI, body of individuals. Body of individuals created by operation of law. Example, old neighbor. Both AOP and BOI are similar to partnership firms, except there is no partnership deed and no profit sharing ratio. AJPs are artificial juridical persons. Example, trusts. Local authorities. Example, BBMP, which is Bangalore's municipality, and BMC, which is Mumbai's municipality. Yeah. Once you're done copying with this, I want to just make sure your expectations and ICI's expectations of you are the same. Yes. So, guys, how many marks is DT? 50 marks. In 50 marks, guys, if you are thinking that they can ask a definition of persons for 5 marks, or they can say define AOP, BOI for 4 marks, guys, that's a wrong expectation. We have about 12 chapters, yes, and 12 good chapters. If you're thinking, guys, they have time or marks for these kind of chapters, no, they don't. Or these kinds of concepts, no, they don't. This is basically so that you are building from scratch and hence you're building up. Don't waste your time reading 2 3 pages on AOP. What is AOP? What is BOI? No. You're going in a direction which is not exam related. It's good to read about things, but I want you to now focus on an exam perspective. So your expectation should be right. In a question like in a sum like in a chapter like this, I don't think there can be a big question here. But this prepares you for other chapters that are waiting for you ahead. Yes. All right. So ending this page here on that note. Anyone yet writing? Okay, perfect. Done. As legal status we discussed. Now, guys, it's part two, which is residential status and steps ahead. Residential status. The above persons may be residents or non-residents to be checked each year. The above persons may be residents or non-residents NRs to be checked each year. Residents have a sad face there, non-residents have a happy face. Next is scope of income. Once residential status is known, we can determine the taxable incomes of a person, that is scope of income. After that, other 5 heads of income. Incomes will be taxed under the following heads. First one is income from salaries, which we call as salaries. It's section 15 or starts at section 15. Next one is income from HP, that is house property, which we'll call it as IFHP, section 22. The next is PGBP, section 28. There, copied. Okay. Capital gains is 45 and IFOS is 56. Guys, let me introduce you to something which I call a shortcut. If you read under that, it's written under each head, shortcut bracket room. That bracket I have opened is called the shortcut bracket. These are basically just memory or conceptual techniques which we can use only in class. Yes. So if you can see, give and take is in that shortcut bracket, room is in the shortcut. So in the exam, you can't call them rooms, they're heads of income. But for us to understand, each of them is a room and the relationship is called give and take for incomes and deductions. Yes. So wherever you see this shortcut, this is just a memory technique or a concept. Under each head, that is room, there will be incomes and expenses, that is deductions, linked to each other. Shortcut bracket, give and take. Next is clubbing of income. Incomes of other persons, example spouse, minor children, etc., may be added to the assessee's income under this step. After that, guys, is set off and carry forward of losses. While incomes are taxed, losses can be set off. Or carried forward. To the next years. Set off and carry forward is not optional. You will see details in the chapter of set off and carry forward. or carried forward to the next years. The next one is gross total income, which is useless because now it's not tax. That number is not tax anymore. And the last point is deductions under chapter, that U slash C are under chapter 6A. Yes, that's the end of page 2. One more page, that's all we need to write, and then we can take a break. UC is under chapter. Next, can we write short forms in the exam? No. Yeah, as a rule, guys, you have only so many questions to answer, and if you know them well, you'll be able to write faster. Just as a rule, don't write any short forms. Yes. Anyone writing yet? Okay. Yes. Ending this year. Everyone. Yep. Perfect. And we move to part 3. Nice, part 3. Total income. This is the income on which tax is calculated. That is TI. Next is AT, advanced tax. TDS, TCS, that is tax deducted at source, tax collected at source. and SAT, which is self-assessment tax, are different ways of paying income tax. Different ways of paying income tax. Next, ROI, a return of income, that is ROI, is to be filed once in the assessment year. That is ROI for PY 23-24 is to be filed in assessment year 24-25. Continues. Additional points. Assessee is the person who is liable to pay income tax. Assessee is the person who is liable to pay income tax. PY is previous year, is the year where incomes are earned. EY, this is after the previous year where incomes are assessed. Example AY 24-25. And last are steps to determine the tax payable. These are different steps. Scroll back. Yeah. Legal status, residential status, scope of income, the five heads of income, then clubbing, then set off, then GTM. Scroll back. So, you finished writing, or you have to write something. Okay. Yeah. This is where you end your writing. Yes, done. Everyone, anyone yet copying? Okay. So now that we've done this chapter, which is called Basic Concepts and Introduction, I'll tell you what we need to do now. Of course, the chapter is over. There are no sums in this chapter. The importance of the chapter is zero. Yes. Then why are we doing it? Because guys, unless we do this, we can't move ahead. You will not get a picture of how the entire portion looks like. And this same thing you have to revise. Yes. Whether it's tonight, whether it's after 1 week, whether it's after 2 months, whether it's one day before the exam, you have to revise. And guys, reading from a book sometimes is painful. So what we will do in the evening batch specifically, we'll be recording these small revision videos. Yes, just like we'll do right now. And these revision videos, we will keep them separate, and you can revise them. I will circulate them. I will share a link, and you can revise them whenever you want to revise these chapters. So let's say after 6 months, 4 months, classes are over. 6 months later, you want to revise, and you feel, oh, I'm feeling very bored to look at the book. So just start the video and your handwritten notes and do it together. Yes, it goes faster. And I have done it myself personally, guys. And hence I feel watching someone revise it for you is much easier to start off with. Yes, because after that, five more subjects will happen, guys, after tax or along with tax. So you tend to forget things. So a quick revision always helps. Yes. So how does that work? I'll show you how that works, guys. For your batch, we have something called a quick book. All right. So as you can see, guys, this is a book which is about 66 pages. I think it's 66 pages. And in 66 pages, guys, I've summarized the entire direct tax. Yes, in just about 66. And out of 66 also, guys, this page is a just an introduction page. And here also I've just tried. So this is the DTS quick book. It's for your CA Inter May 2024. I also have this for 23. Then I will also have it for 24. So every attempt, there is a quick book. Use this quick book to do a best and very quick revision of entire DT. Questions referred to in this quick book are of which material, guys? ICI. So there are question numbers written here. Example, guys, if you don't take this chapter, but if you take the next chapter, residential status, and you are revising, suddenly you'll see references. ICI illustration number 5, and which paper, guys? May 19. So you will, when you come to this stage, you can either go to your our Yesh's book sums, or you can also, because a lot of people who are crash course students, etc., they use this book specifically. Only we learn only from this book in the crash course. So they use this book to refer to this question. They go to that paper, they solve that question, or they read that question, and they come back. Yes. So this has references to all the different questions as well. All right. Um, at least three sums to be written and practiced per chapter for best results. So whenever you're revising, guys, you have to practice at least three sums like you would probably write them in the exam. Direct tax is 50 marks, is very scoring. Start the paper with GST and then proceed towards DT. These are just telling you what to do. And these are only for memory techniques. These are basically shortcut practice. Yes. So with that, guys, let's recap. I'll be recording this. So you will have to look here also and handwritten notes and revise it. And very nice responsive revision we'll do of this entire chapter. Yes. So you can go to the first page, everyone. Yes, everyone okay, everyone okay. And we'll try to keep it as short as possible so that when you revise also, you can revise very quickly. All right. Guys, welcome to the revision videos. The first video is of the first chapter in your book, which is called what? Basic concepts and definitions. Everyone has to participate. Your voices will not be recorded, but it's a good thing that you can practice. Guys, is there a need to collect tax? Yes, the government needs the money to spend on various things like healthcare, bridges, roads, railways, etc. And are there two different types of tax? The first one, DT, and the second one, IDT. Guys, can we differentiate between them? Direct tax is on your income. Indirect tax is on your consumption. When you study GST in your portion, you will understand that. Next, direct tax is under the income tax. Indirect tax is GST. Direct tax is progressive, because the more you progress, the more you pay. Indirect taxes is regressive. Basically, the poor and the rich both paid, so poor get poorer. Guys, which has a wider base? GST. More people consume, more people pay, which has a smaller base, DT. And from a government's perspective, guys, both are equal children because they both contribute 50-50%. Now, guys, in your new portion from May 24, GST is also 50 marks and DT is also 50 marks. Next, guys, who levies the GST? Or sorry, who levies DT? Is the Ministry of Finance, Department of Revenue, and CBDT. There's an Income Tax Act of which year? And income tax rules of which year? 1962. Of course, the act is divided into sections, subsections, etc., which we'll keep looking at and we'll keep by hearting the important ones. As you don't need to by heart every section, but for every chapter, I will tell you which sections are important and those sections you have to by heart. Yes. The act is modified every year. Is that true? We have something called the Finance Act, also called the Budget, guys, which applies to your year. 2024 exams, which budget 2023 applies. Circulars are issued by CBDT, not important, guys. Notification are issued by central government, not important. Case laws are not applicable at which level, guys? CA, enter. And now let's see the different persons. Guys, is everyone taxed the same in India? No. Guys, I'm an individual, you're an individual, we are taxed differently. Yashas Academy is what? Partnership firm. Reliance is what? Company. My family HUF is taxed. Everyone is taxed differently. So the starting point is knowing who you are. So the first person is called what? Individual. Minors, majors, even people who are lunatics, guys, or deceased persons also may have to pay the tax. You will see ahead as we move ahead. Yes. HUF. Members include what? Karta and co-partners, including women. It is a distinct entity only for what purpose? Tax. Otherwise, it's the same, guys, family entity. But tax, it will pay its own. It has its own tax and it has its own PAN number. Next, partnership firm, guys. LLP, are they different? Yes. But from a tax perspective, the same. Guys, each will have its own PAN and they will pay their own taxes. What about share of profit and all? We'll see ahead as we move. Next, can we have an Indian company? We also have a foreign company. Again, just like Indian companies, Tata Motors, foreign companies, Tesla. Will they pay the taxes in India? Yes. Or will they have their own PAN? Yes. Next, AOP and BOI. Very important, guys. AOP is what? Association of persons. Can any persons become part of it? Yes. Individuals, companies, anyone can be part of it. And guys, is it intentional made? Yes, to make profits, guys. Example, me and Yashas Academy coming together to run crash course classes. Guys, who will pay the tax? AOP, they have their own PAN and they will pay their own tax. And BOI, is there a difference? Only individuals. And that is not because of intention. It is operation of law and they pay their own taxes. But both of them are very similar to what, guys? Partnership firm. If I put a profit sharing ratio here, what will it become, guys? Partnership firm. Local authority is like a municipality, and they are also called artificial jurisdictional persons. Yes. We move now ahead. Each of the above persons pays their own taxes and have their own PAN number. All right. Guys, what is a beneficial interest holder? Someone who holds 10% or more in equity or 10% or more in profits. What is substantial interest? Someone who holds 20% or more. So if I have 50%, guys, am I both? Yes. If I have 15%, beneficial. If I'm 5%, nothing. All right. We'll see what the impact is. Guys, what is the previous year? The year you earn money. What is the assessment year? The year you are assessed. And each of the years is called what, guys? Financial year. And calendar year is the one where you celebrate the new year. For your exam, guys, what is the previous year? 23, 24. And what is the assessment year? 24, 25. In case of a new entity, guys, can I start a new business today, 1st September? Let's say September month, I want to start. Yes. In the first year, it will not start from 1st April. It will start from which date? 1st September to which date? 31st March. After that, regular. Yeah, only the first year is the difference. Next, assessment means checking. We discussed this at CA final only. Next, guys, income we'll see ahead. Or some of these parts come in different chapters, so we'll see them ahead. Guys, are there some steps to calculate tax? Yes. First one, legal status, who you are, that will define. Second one, essential status. Next one, scope of income. How many rooms do we have, guys? Fine. In each room, can a person have incomes? Yes. And because you have incomes, guys, give and take, the government says because you're offering us income to tax, we'll offer you it. But remember, guys, it should be linked. Can I minus my flight tickets to come to Bangalore from my income? Yes. But can I go for a holiday to Kashmir and minus it? No, because that is not linked. Next, I will have five heads of income. Please tell me the first head. Salary. The next head. House property. Next head. Business and profession. Next head. Capital gains. And last one, IFOS. Only open the room if there is income, otherwise keep it locked. In each room there will be income and there will be, and the net income will be walking out of that room. They all meet in a funnel, guys. Do you remember that? And they will go to where? Clubbing of income. Guys, if it's your income, who should pay tax? You. If you artificially transfer that income to someone else, will that dog come back to you? Yes, that's called clubbing of income, addition of income. Next, can you have losses? Guys, very, very nice. Losses are not good, but they're actually good in an indirect way because can you set them off? Yes, so if my profit is 100, loss is 20. Guys, I will pay tax only on 80. Excellent. And if I can't sell it off this year, guys, will it go waste? No. You can carry them forward. But just like the cake in the fridge, you can keep it in the fridge, but you can't keep it forever. You have to use it very soon. Next, guys, which number do we come to? Gross total income. It's a very useless number because you don't pay tax based on that number. But after that, guys, what do we have? Deduction under which chapter? 6A. And after that, we have the hero number, which is called total income. Based on this total income, you calculate tax, which is paid either through advance tax or TDS, TCS or self-assessment tax. And finally, you'll tell the story to the government by filing your return of income. Guys, remember, this is the first chapter. This is something on rates of tax, which we will do in another chapter dedicated. But remember, guys, every step we move ahead, every chapter we do, watch these revision videos and revise so that it gets better. We'll have revision videos generally for all chapters. We'll revise it here only just like this. Yes.